So everyone's now looking to buy into oil stocks. And just to give you some perspective, 2 years ago, in March of 2021, oil prices were negative 36. That's right, negative 36. You had to actually pay somebody to take a barrel of oil in March of 2020, negative 36. Today, as President Biden announces that he is going to ban the imports of Russian oil into the United States, oil is somewhere between 120 and 130. The experts say it could go to 150, 200. I have people tweeting at me that it could go to 500. Now, maybe these folks are right. However, I can say that none of these folks were tweeting at me to buy oil or to try and buy an oil tanker and store oil when oil was being given away, where people would pay me $36 to take a barrel of oil. And so I'm going to stick to what I know, which is that I believe that the long-term trend for oil is still what it was before this war erupted, which is that we are still on a long-term trend to phase out fossil-based fuels and to move to electric vehicles in terms of how we transport ourselves. In terms of freight transportation, we are still transitioning on to autonomy, which is going to reduce fuel consumption, potentially start to use hydrogen, at least for short haul. And then in terms of our daily energy usage, moving towards solar power batteries. Nothing of what is going on right now changes that long-term trajectory. So for our strategies and what we do, we're going to focus on innovation, because at some point, maybe it's 3 months from now, 6 months from now, oil prices will have discounted the worst. And I put out a recent tweet stream talking about demand destruction, which is that at high oil prices, the incentive is far greater to actually now migrate over to one of these technologies that I mentioned, electric vehicles, implement autonomy to save fuel costs, use solar power and batteries. Generally speaking, invest more into renewable energy. Now, no question about it, it's not going to instantly replace the amount of oil that is going to go missing as a result of not using Russia's oil. Nonetheless, in that same tweet stream, I did mention that we as a nation, the United States at least, we have enough oil for ourselves. We have enough carbon-based energy for ourselves to get through this period of transition. And so while there is a great panic about oil prices, et cetera, there is no equivalent jubilation that as oil prices go higher, it makes the sort of the threshold for wanting to buy an EV, to implement autonomy, to move to hydrogen for freight and logistics, to see more solar and batteries. That threshold now really is getting lower and lower. In other words, more and more people are going to be able to look, run the numbers and say, hey, I put off buying a Tesla, but I think the time's right now. Let's go ahead and do this. Regulators from around the country are going to look at companies like one that we own in Profits Unlimited, Too Simple, and say, autonomy really makes a lot of sense if you're on the highway. What can we do to actually move this innovation along so that when we have trucks on the highway, they are using as little fuel as possible? This in effect also has the benefit of improving the efficiency of the supply chain so that things move faster and more efficiently, also reducing our overall energy consumption. And then on a personal basis, any number of people that were thinking about solar power or batteries and thinking that, well, if fuel prices are going up, in all likelihood, electricity companies that are still using carbon-based fuels to generate electricity, that those prices are going to go up. We were looking at solar. Maybe it's time for us to pull the trigger. Now, in of itself, each single action means nothing. However, if 100 people in your city do it, if 1,000 people in your county do it, if a few 100,000 people in your state do it, and then you count it out across all the states, maybe my numbers are low. Maybe it's several thousand people. Maybe it's hundreds of thousands of people per state that start to do it. Now you start to have a meaningful impact on the demand profile, which means that there is more oil than what you would think. There is more natural gas than you would think. There is more room for energy prices now to start to actually roll backwards. So many people write me and want a magic bullet for high oil prices or high energy prices and for what they can do to our life. And the truth is that the magic bullets are all around us, and they've been here for some time. They are electric vehicles. They are autonomy. They are self-driving cars. They are robo-taxis. They are battery storage. They are renewable energy. They are solar energy. We have so many magic bullets that are sitting around that even given a small incremental amount of adoption by a lot of people as a result of seeing very high oil prices at the pump at $4 or $5, or seeing on the news that oil is making multi-year highs, or seeing electricity prices rise, is going to make adoption that much easier. And for us, that's great news. It's just fantastic news, because over 2021, especially the last 3 months of 2021, and then these first 2 or 3 months of 2022, stock market investors have sort of said, magic bullet, bad magic schmullet, nobody cares. Listen, what matters is this. First, interest rates are going up, your stocks are worth nothing. Now it is that, hey, there's a panic about war between Russia and Ukraine, your stocks are worth nothing. Meanwhile, the value of our stocks to people, companies, organizations, countries is rising, it's rising, it's rising. So you can either go with the narrative of the market, which went from saying high interest rates are terrible for your stocks. Now, the reverse concern is that, oh, oil prices are going to cause a recession, which of course would go with low interest rates. That's somehow really not being thought about in some way as being a positive yet. And no one really is seeing the fact that actually EVs, autonomy, robo-taxis, they represent a series of solutions that really go all the way from short-term to medium-term to long-term. And for sure, the same thing that I was telling you in terms of the adoption of these technologies is also what is going to happen in the stock market, as any number of people look at our stocks and say, these things have gotten really cheap when people sold them because of interest rates. And then they've sold down even some more as there's been a general panic about stocks. But yet, look at what this company does, and they're still growing. They just reported a quarter. They are still reporting quarters where they are saying like, hey, our business is still strong. Maybe let's go in and buy a few shares. Maybe at first it's just a few portfolio managers. However, usually based on my experience, when one portfolio manager starts to buy and experiences a little bit of success, that starts to spread where a second and a third and a fourth and a fifth portfolio manager says, well, I got to compete with this person, so I need to go buy some myself. And now the buying spreads out and the buying spreads out. And now the momentum starts to roll in the other direction. And that's where I believe we are. Now, as you all know, I've wanted a bottom in our stocks for many, many months now, and I've gotten all of those calls wrong. So I apologize. Nonetheless, our stocks are cheap, our stocks are growing, and our stocks represent real, actual solutions to the problems that we face today. They are different than the backward-looking solutions that you are reading about in the financial media, which is about increasing our investments in oil, increasing capacity in various ways, and that's all fine. And I'm pretty sure we'll do some of that. Nonetheless, the long-term trajectory is all for our stocks. The really big money is not going to be in oil in the long term. In the short term, hey, there's investors that own oil stocks, and they're making a killing, and hey, that's good for them. But for us, we're going to focus on innovation and growth and making the really big money. And that is always made over time. And that comes by focusing on a company that provides a valuable product or service that has a long runway where you can see year after year of growth coming. And that's where I believe we are currently positioned and are perfectly positioned. And at current prices, with our stocks having discounted high interest rates that today are, in my judgment, completely unlikely. Now they have discounted a panic about the stock market, which is about a recession that's going to be caused by high oil prices and high commodity prices. They're even cheaper. From where they are today, they simply need to grow, truthfully, quite modestly. 15% will do. The truth is that many of our companies are growing much faster than that. And even better, they will grow irrespective of commodity prices, because these are largely digital companies that make products and services that really facilitate the digital side of our economy, which is where the greatest value is made on a day-to-day basis today in our country. So I would tell you that if you own our stocks, and if you have the money, try and average down a little bit, because the prices are simply too low. Generally speaking, we tell you to not average down. We tell you, hey, equal weight and let it be, and that is still perfectly good. However, if you do have money, I would tell you average down. Go buy some shares of Zoom. Imagine that Zoom represents as much a solution to high gas prices as it did for the pandemic, when people stopped going to the office and just started to Zoom. Or Teladoc, which represents as much of a solution as it did during the pandemic as now, wherein you might choose to simply use that as a platform instead of driving to your doctor's office. Or Zillow, where the millennial generation and Gen Z, who are still rising in terms of their financial power, in terms of the amount of money that they earn, are still out there buying houses, and where there is still a significant shortage of houses. Rather than fly someplace to go look at a house, drive someplace to look at a house, you use Zillow. So if I go through our companies, literally, every single company represents a solution to a problem that currently people see now as a result of the war that is going on. No different really than how it was during the pandemic. So I believe that the future is incredibly, phenomenally bright. I just look at our companies in terms of their product set, the solution set that they offer. Well, they're just one of a kind. I mean, they're amazing, and there's nobody creating anything like that again. Then when I go and look at the price that these companies are trading for in terms of their stock prices, I mean, you all know our stocks have gotten shelled. I mean, there are stocks like Zoom that are down 80% from the high, 80% from the high. They trade at very, very low valuations. These valuations represent low risk in my judgment. And remember, what we do is opinion, not advice. In the end, all your decisions, the responsibility lies with you. But nonetheless, this is what we think. So what's then required for us to get what we want, which is we want to see gains. We want to see our stock price rise. Well, we need a little bit of demand. We need a little demand to come in for the stocks. And I believe that we've got the underlying conditions for it, which is that the Federal Reserve was planning to raise interest rates. The markets went with the idea that they were going to do it 7 times in a row. It's now down to 3 or 4 times, at least in terms of market expectations. So that's in our favor already. Second, we needed growth, and the companies, truthfully, have never stopped growing. They're all growing. From the pandemic, where many of them experienced growth rates of 50, 100, in the case of Zoom, for example, 300%, they actually have grown on top of that. When the markets have sort of expected them to actually show declines and priced in as if those pandemic gains were one-time things. So we've got the macro situation moving in our favor. The company growth is moving is in our favor and always has been in our favor. So last thing we simply need is the market to shift its expectations. And I believe that the combination of interest rates, the growth, the scarcity of growth that's available in the stock market once people realize that, well, it's going to be hard to find companies that are growing at 15 or 20%. That will bring the demand. And then I believe we are going to see significant gains that are going to run for many years to come. So I know many of you are sitting on very large losses, and I would still say to you what I've been said, and sometimes may sound a little bit like hype, but truthfully, all the big money is always made over time. All the great investors make big money over time. While people are thrilled to make short-term money, the big money is made all over time. And that comes from being strong hands, being disciplined, being unemotional, focusing on the facts, and keeping your mindset to what we say all the time, being bullish, being optimistic, being positive. And that's where I am. I am bullish, I am optimistic, I am positive. So be strong hands, be BOP, and come back again next week. Until then, this is Paul saying bye.